Alrighty guys, what is going up? Welcome back to another episode. I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about, did we miss the stock market bottom? Now, did we just enter the stock market's bull of 2020? Or are we still in a recession? We're going to go ahead and look at everything that you can possibly ask for. We're going to look at information that you guys really need, and then we're going to look at the computer and look at the stock support, resistance, and kind of where I see it in the future. But before we jump into the episode, right now we are doing an AirPods giveaway, so it's super simple on how you guys can enter. All you have to do is like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. Once you guys do that, you guys will be entered for the giveaway. So let's jump into the episode. I hope you guys enjoy it, and overall, hope you guys learned something. Let's go, roll the intro. Bam! Now I'm sure that all of you guys know we had one of the best weeks that we've ever seen last week. Last week we had incredible gains. Pretty much anybody who started investing that week is profitable. Now the stock market is kind of in this very volatility point where some days it's going up 1,200 points, some days it's going down 1,300 points, but overall it's kind of pretty risky to invest in. Now I'm sure some of you guys have realized, well, the stock market didn't hit the bottom. We've kind of going up on this bounce of where we're tracing back up to the highs. So what happened? Now there's this fear called FOMO. This is fear of missing out. What this means is, if let's say we've had any investment that we've ever heard of, Bitcoin, real estate, we've had any investment, what tends to happen is people get scared, so they buy. People get scared and realize, oh crap, I want to get in on a little piece of this action, which will make that stock market go up even more. Very similar to a bubble, just like the tech bubble, just like the housing bubble, just like the Bitcoin bubble. All these people are investing into, one, something they don't understand, two, overvalued products. You know, look at Bitcoin. Bitcoin squeezed all the way up to $19,000. People didn't realize what they were buying until it crashed. I feel like one of the best ways to get around, FOMO is setting alerts at certain price points of which you guys want to buy. And now over time, during this falling market, let's say you guys feel there's, some sort of value, if let's say at a stock at $10 and it's currently at 14, don't buy it at 14. Set an alert at $10 and just wait it out. The thing about investing is 90% of it is actually waiting, and then 5% of it is buying, and then 5% of it is selling. So just understand all those points and you guys will be fine. Now the next thing you guys need to understand due to this virus is, do you guys think we're starting to get healthier? Do you guys think that we've hit the peak? Do you guys think that people are starting to go back to work? The answer is no, we aren't. We're hitting peaks. Maybe in New York already hit its peak just because there's over 100,000 cases there alone. And it's one of the worst states in the United States right now for this virus. And there's a lot of states like Detroit, where I'm from, that are climbing its way up to there. So I personally think, due to unemployment, due to people being laid off, and not to mention all these companies, guess what? They're not making money. So guess what? For this next earnings report coming this month, I can almost guarantee they've lost money. Now I looked at Ford today. Ford announced theirs today, and guess what? They lost money, which made the stock fall even more. But overall, I think another big issue is unemployment. We have millions upon millions of people contributing into their 401k, which gets invested into the market, which kind of makes values go up more. And since people aren't being able to work to pay for things, to keep the economy going, and to overall invest in the stock market, I think that's something we need to take into consideration. But another thing that you guys have to understand is, some of the worst times we've ever seen, that next year has been one of the most profitable years we've ever seen. So giving you guys an example, in 2008 we had one of the worst crashes we've ever seen, but guess what? 2009 and 2010 was roaring. People were getting 50% returns per year, and it was overall just a crazy time to be an investor and to make a lot of money. So I'm taking the 2020 and the 2021 approach of averaging my positions down, and if the stock market continues to go up, then I'm moving my averages up. And if it goes down, I'm moving my averages down. It's as easy as that. So now let's go ahead and look at the computer, support, resistance, and where I see the stock market going in the future. Let's go. Alrighty guys, so we are up and loaded here on the TD Ameritrade's Thinkorswim platform. This is one of the best platforms for overall just investing here. We have ticker symbol SPY, so this is just the S&P 500's ETF. The S&P 500 is just the top 500 companies on the market. It generally tracks the S&P and just the overall market, to be honest. So as you guys see, we've had just some crazy moves. If we go ahead and look at 2008, look at this fall, really hitting all the way, hitting highs at 160, and then it went all the way to around $65 at its lows. And then 2009 came around, but look at this. If we would have obviously got in at all of these peaks, look at this return rate here. This is a 47% return. In 2010 would have been another 30 or 40% return, and overall just an 80% return. And now we've started to realize that the stock market is continuing to fall. If we look at it, the coronavirus started and things just went to crap. And so what I started doing, as you guys can see, is setting alerts at price points that I feel like are easily able to hit, but overall great price point. So looking at it here, you guys see this yellow line. This is what you call a 200 moving average. I can't even talk. What this means is, if a stock comes in contact with it, it either uses it as support or resistance lines. So as you guys see, it hit it, it's resistance. So now it's continuing to go up. Now it broke above it or below it. So now this should be acting as resistance. Now there's a variety of other lines. So as you guys see, we have one right here. This is the 9 moving average line. So this really could use this as resistance. So as you guys can see, it hit it and got sold off, and now we're kind of on this going down trend. I personally feel like the stock market's going to do what you call a double bottom, just like it did in 2008. We've had a lot of false breakouts and false, people saying, oh, the market's going back up and starting to invest, and that's all FOMO. You just have to be consistent with any long-term investment. But if you're a swing trader or just an overall day trader, all of this stuff honestly doesn't really matter, because we look at day to day, how the day's doing, look at the futures, look at the top earnings, look at pretty much everything that you can possibly ask for when you're day trading. But when you're overall just investing, you're a beginner, you need to, set some alerts like I did. I feel like getting into it at 145 is a great point, and then all the way down here at $220, I feel like it's very doable. Having these alerts set, you can average your position down and overall just make more money. If we go ahead and go back here, you guys can see how bad this is, how steep this is. So do I think like it's going to just immediately do the V pattern? What the V pattern is I'll show you real quick. Let me get some drawing tools up. But what this V pattern is this steep decline, and then this. We've had buying pressure, so now do you think it's going to come like this and continue to rally up? No, I personally think it's going to do this. Let me go ahead and erase some of these here. I personally think it's going to do this, where it's going to, it's going to fall down just like it did. It's going to come up, find some resistance, whether it's here or maybe up a little more. It's going to find some resistance, and then it's going to fall and double tap right here. So now this support line right here is going to be the hardest for it to actually break below. If it breaks below this, then it could possibly even go down to this $200 mark. I think this $200 mark would be a fair buy, but let's first wait for it to break, the 220 area. Now, if it does, which I think there's a small possibility that it does, I think with all these companies releasing, bad earnings, people not being able to work, unemployment hitting record highs, it could definitely continue to fall. But you guys have to understand too, if it bounces, there's a great opportunity with the W pattern here. But let's go ahead and erase some of this, and let's talk about trend lines here. So let's go ahead and get rid of this. So now, if let's say you guys, are like, it's going back up, we see this trend here, if let's say you're just looking at it short term, you see the trend, it's going back up, you have to zoom out, okay, and you have to look at pretty much everything. You have to realize the trend right now is this. That's the trend. So now for it to even be considered, a possibility of it to break out and go back up to highs, we need a breakout of probably around this $300 mark. I don't think 275 is considered a breakout point. I think breaking above this $300 mark would be even close. It would be close to consider, okay, things are getting better, everything's starting to come back. But overall, I think it's going to hit this, come back down here, and just like that. That is just considered a double bottom. It did this multiple times in 2008 and some of the worst financial crashes that we've seen. Alrighty guys, so I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash that like button. We'll see you guys tomorrow in another episode. And overall, I hope you guys learned something. That's the biggest thing. Make sure you guys like, subscribe, and check out my podcast. All that will be down below. We'll see you guys tomorrow. Take care. Peace out. Bam!